Hi, are you thinking about leaving New Jersey, specifically TENAFLY or the surrounding Bergen County areas? Maybe you're worried about capital gains, the exit tax. These are all really normal questions. I help people answer these questions all the time and save them thousands of dollars when they are planning a New Jersey exit. My name is Stacy Esser, and I am with the Stacy Esser Group. I do help people all the time, just like you, save lots of money. My number is 201-292-0011, and you could always, reach out to me or click the link below to schedule an appointment with me. So today I'm going to break down for you some misnomers about the exit tax, capital gains tax, and also just stopping you from leaving actual equity on the table. So the government does care about one thing, which is, did you make a profit? And that profit's called a capital gain. But here's the good news. If you've lived in your home for 2 out of the last 5 years as your primary residence, the IRS lets you exclude up to $500,000 in profit if you're married. If you're single, it's $250,000. Yes, you get penalized if you're not married. This means you only pay tax on the gain above that. So let's talk about what counts as the gain, because this comes up all the time. The sale price is minus what you originally paid plus what you spent on qualifying improvements. And we're going to get to that in a minute. This is a big one that people don't realize. You can also deduct your closing costs and your selling costs. So the key is to raise your basis with improvements to lower your gain. So what I love about this is that when you raise your basis, you actually improve the value of your house. So it becomes a win-win. Let's talk about what this New Jersey exit tax is. And people always ask me about this. Let's clear up the confusion. So the New Jersey exit tax, it isn't a new tax. It's a requested withholding for anyone that's selling property in New Jersey who is not a resident at closing. So at closing, New Jersey requires the attorney to withhold 2% of the sales price or 8.9% of the actual gain, whichever is more. And that money goes to the state as a placeholder in case you owe income tax on the sale. So then later when you file your New Jersey tax return, you either get a refund if you overpaid or you pay the difference if you owe more money. The state of New Jersey finds a way to get you to pay. This catches a lot of people off guard, but with the right documentation, especially your cost basis from improvements, it's something that we can plan around. First thing is to keep all of your receipts so that you can prove what you spent on your house. All right. Let's talk about capital improvements and what lowers your tax bill. So capital improvements are value-adding upgrades that increase the basis of your home. The higher the basis, the smaller the gain and the less tax you may owe. And here is the big mistake that a lot of sellers make. They don't keep records or they don't realize what qualifies. So let's dive into what counts. Capital improvements must add value to your home. They must prolong its useful life or adapt it to a new one, not just cosmetic touch-ups. We're talking real improvements. So I want to go over with you like the 5 best ROI projects that also will help you at tax time, right? We want to help you increase the value of your home, and also it is a deduction to your capital gains. So a new roof. Buyers love a home with a new roof. No surprise costs, no insurance issues. That's another video in and of itself. A new roof is a capital improvement and adds resale value and reduces buyer objections. It's an amazing ROI, and of course, it helps your capital gains. Replacing your old windows. This is another big one I would recommend. Old drafty windows are a red flag for a buyer. New energy efficient windows lower utility bills, improve comfort and quality, and qualify as a capital improvement for tax purposes. HVAC, upgrading your heating and your air conditioning. New systems are a major buyer confidence booster, whether it's adding central air or replacing a 20-year-old boiler or furnace. This adds real value. I mean, I have so many clients who really just wait it out, right? Their boiler is just going steady. It's a very good boiler. And I get it. The professionals are going to try to help you replace the parts and just let it go. And these are hefty, hardy machines, and most likely they're going to tell you not to replace that boiler. We have ways of dealing with that when we go to sell your house. I would say to you, though, the air conditioning, if you're going to pick one between the air and the heat, I would say focus on the AC, because that is a little bit of an environmental issue with the freon and leaks, and it definitely causes a lot more concern to buyers and to buyer attorneys. Let's go next. So kitchen or bathroom renovation. So these are the top areas that sell homes, kitchens and bathrooms. These improvements are amazing. They are always part of a higher price tag on your house, and they count towards your taxes, capital gains expenses. So as long as you're not just painting your cabinets, these upgrades increase the value and they lower your taxable gain. Let's talk about exterior upgrades, siding, driveway and door improvements. New siding, repaved driveways, or any upgraded front door boost your curb appeal and qualify as a capital improvement. Those are amazing things to do to help get the highest dollar for your house and, of course, reduce your tax gains. Painting, while painting usually is not a deduction on its own, painting is part of the larger improvement project like a renovation, and it can be included as part of your total improvement cost. Disclaimer, I am not an accountant, and obviously these are my recommendations, but you should speak to your accountant to get more detail that's from a qualified person. So why does all this stuff matter? So these upgrades aren't just about your taxes. I'm telling you, they help your home sell faster and sell for more money, and you will beat out another house that hasn't been taken care of like this. So that's why I love this conversation, because I want to help you guys early on. I want to help you improve your energy efficiency. I want to help you maintain lower costs. I want to help you avoid your capital gains tax. And if you can do some of these things before you're ready to sell, you're going to actually enjoy some of these improvements rather than doing these things just to sell your house for more money. If you're thinking about relocating, whether it's now or in 6 months from now, I don't want you to guess your way through it. Let's run through the numbers together. Let's talk about what those ROI, return on investment pieces are that make the most sense for your house, that will lower your taxable gains and help you with your next move. I'm Stacy Esser, and if you want to schedule a no obligation, confidential appointment to discuss your house with me, you can reach me by calling me at 201-292-0011, or you could just book an appointment down below. I'm always here to help. Thank you. Bye.